Good evening and thank you for watching NTV tonight. Uganda is in a state of demographic transition. We have one of the fastest growing and of course youngest populations in the world. Now, as a result of these monumental changes, Uganda is going to have to adopt a paradigm shift to create a robust and efficient pension sector. Question asked, what measures can be taken to achieve this much vaunted social safety net that will deliver a reasonable standard of living for those who have retired and of course protect their benefits? I'm your host Ben Mwine, sitting in for Patrick Kamara, and on the spot tonight is Moses Bekabye, the interim chief executive officer of the Uganda Retirement Benefits Regulatory Authority. Welcome to the show. Thanks a lot for joining us, Moses. It's good to have you tonight. Yeah. You happen to have a lot of answers to give to questions that we are going to put before you on the spot tonight regarding our money, as we like to call it, and that's why you are on the spot tonight. Yes. As we jump into it right away, the Uganda Retirement Benefits Regulatory Authority, very many words. What do they stand for as far as Ugandans are concerned?
The Uganda Retirement Benefits Regulatory Authority is an entity that was created by an act of parliament by the government to regulate the pension sector as a whole. And this covers all the retirement benefit schemes or pension schemes for that matter in the country, and also including in the private and public sector, basically to oversee the establishment, management and operation of all pension schemes, and ensuring, with the objective of ensuring that these savings by employees or those who save, especially those who are employed both in private and public sector, are actually protected.
First question, of course, that follows up after that is, what is the responsibility of the state, or in this case the government of Uganda, regarding pension for its citizens?
Yes, I think that's a good question. The government of Uganda, like any other governments around the world, they have a responsibility to ensure that its citizens live a decent life, welfare. So it's a responsibility of the government, which is also actually stated in the Constitution, that government has the obligation, the duty, to provide the social safety net to its people. So the government has a responsibility to ensure that everyone in the country, whether they're employed or not, actually have a social protection safety net. And this is why the government is undertaking these reforms. And also that's why government is in a parallel way, as we are doing, is also implementing the Senior Citizens Grant Program, which is covering 14 countries and so on. This is aimed at slowly
14 districts.
14 districts. Yeah. And this is aimed at putting in place the blocks that will ensure over the longer term social protection for all citizens in the country.
Now, of course, when you talk about social protection, you're talking about protecting people who are employed and not employed. Uganda happens to be in a very unique position in the world. I think probably one of the most unique in the world, in that, first of all, we've got a very young population. Secondly, we have quite a bit of a high unemployment rate among our working force. And then, of course, we have a very big bulk of our population that are currently living under the poverty line. How does all this fit into having an efficient pension policy and system?
Yes. I think let me talk about it in a broader context. The government has the responsibility, of course, to ensure that its citizens have a protection, this social protection. But also government has, in order to achieve this, government has to implement things that grow the economy. One of the key things that the government is doing is right now trying to invest a lot of money in infrastructure, education, health, and so on, is to ensure that the economy actually grows. Once the economy grows, the incomes are high, the savings go up over time, and that means that people can save for their retirement or for the future. It may not be for retirement. They may have other saving vehicles, and therefore be able to actually provide a social protection system for themselves.
Right now, the current state of our pension system, the only thing you hear about it really mostly is bad news in the papers about someone has stolen our money, and usually a lot of it. What's the current status of our pension system in the country right now?
Right now, and I must say, since 2008, we've been implementing reforms to address some of these issues. I must say that the pension system as it is still has governance problems because of the scandals you're talking about. It has low coverage, meaning that most of the people who are in employment, 14 million people of them, are not covered by social protection. Only about a total of about 70% are employed. Are covered by social protection coverage.
That's a very dismal number, isn't it? I mean, 7% of your population being covered as far as pension is concerned is quite alarming.
It's very, very small. So it's the duty of the government really look out beyond those who are employed. But even then, those who are also employed, some of them are not actually covered. Even those ones who are covered, some of them don't get their pensions. So that's why government is undertaking these sweeping reforms in order to come up with a system that is efficient, a system that is well governed, and a system that is robust enough, and also to increase coverage so that more people who are mostly in the informal sector, you mentioned a few in the formal employment, majority of them, about 85%, they are in informal employment. So if you're talking about a national coverage in terms of social protection, you really have to look at these people who are employed in the informal sector and those who are self-employed.
If I take you quickly back to the discussion regarding the formal sector, and of course we've got the public service, we've got the very small percentage of people who are in the formal sector and the military services as well. Are you suggesting that the shortcomings that we have right now in our system is because of how it has been run? Is it a governance issue? Is it lack of proper checks? Is that what the policy is about in terms of all the reforms that we are currently trying to undertake?
Yeah, there are a lot of issues or constraints or problems that the reform is trying to address. One of them is governance. That's one of the biggest problems, and that has a problem of creating a lack of trust and confidence in the system. So without trust and confidence in the system, you can't build a pension system, because there is a lot of trust that is required in order.
You're playing with people's money, so trust and is always going to be one of the biggest pillars for something like that. Yeah.
Yes, but also, as I mentioned, there's the issue of coverage, expanding coverage beyond what we have now. Last time I said in Kenya right now, they are not very good, but they are much better than we are. Their coverage is about 20%. But many other countries are between 40, 50, 60%, and some countries in Europe or America, they are close to 90% coverage. We're only at 7%. Then thirdly, also the system needs to be funded. Both the public service pension scheme and also some of the schemes which are non-mandatory, some of them are not fully funded, including the voluntary schemes. Some of the voluntary schemes are not well governed. Some of them are well governed, but some of them are not well governed. And therefore, it's the intention of the government to address some of these issues, which impact on the benefits of the savers. And then lastly, as we do these things, and as we reform the sector, we also address the issue of low savings in the economy. Low savings means that the economy doesn't have enough monies which it can depend on its own without depending on external sources to finance its development. And this is a very, very important thing. But this is a secondary issue. But the primary objectives is really to protect these savings and also the investments arising out of these savings.
You're saying we're still depending on other people to run our country, which is never holds you in good stead as a country, does it? It creates a lot of problems.
That's correct. And in the case of the public service pension scheme, as you know, it's always in arrears. It is a system that is non-funded right now. We are looking at gradually moving to a system that is contributory so that people can save money, and monies are transferred there either on a monthly or quarterly basis, like the public service, like the NSSF is, in order for their funds to be invested so that they can get a return on this money. And they know at any one particular time how much savings they have.
So they're doing that with the government be contributing as well as, you know, because right now the NSSF scheme, you've got your employer giving some money to you as well as you, of course, contributing to that. Are you suggesting that the public service would be under some sort of similar structure?
Yes. In the interim period, there's going to be kind of like what we call a hybrid. A hybrid meaning having a combination of the defined benefits, the system which is not contributory like it is now, combined with a contributory system, but gradually moving incrementally to a system that is contributory. So in the interim period, it's going to be a dual system, kind of.
Thank you very much, Moses. We take a very short break. When we get back, we continue our discussion regarding the ongoing pension reforms in the country, of course, something that very much affects you and your future in very many ways. When we get back, we talk a little bit about voluntary versus mandatory contributions. How does that affect you? How does that work? And then, of course, some very two confusing words for many people regarding these ongoing pension reforms. Liberalization versus privatization. What's the difference? How does it affect this discussion that we're having? We'll come back and talk about that, of course, give you a chance to be a part of the discussion as well. And you can join us on our social media, NTVUganda on Facebook, and our Twitter handle at NTVUganda if you want to ask a question or share your thoughts. And we'll get back into that when we come back in just a few minutes. Don't go anywhere.
The 5th annual Top 100 Gala Dinner is here. Get seated among the great this November as Daily Monitor and KPMG recognize the 2013 Top 100 Entrepreneurial Giants. Be part of this inspiring Gala Dinner on Friday, November 8th, 2013 at the Helipad Kampala Serena Hotel. Tickets are limited at only 150,000 shillings. For reservations, call Lydia on 0706 188 046. This award is sponsored by Stanbic Bank, Sage Pastel, and I say, getting better, growing stronger, going higher.
Diru yo! It's time to go dancing in Aringo, because if you're on Airtel or Worried, you stand a chance to win up to 5 million shillings every day.
5 million!
I'm on my way coming,
yeah.
So just be ready to enjoy this 5M.
Twabare yo mwe namba gamba awakazanyije kali kato. Nimbasaba muzana kazano ka diriyo nimwe muhangure sente nkizina hangura.
Yes, 5 million shillings ayo diru yo. All you have to do is SMS the word win to 188, answer the simple questions that follow, and then you will enter a draw to come to NTV and get a chance to simply pick a box and win loads of cash.
Only with Airtel.
One reason to love Uganda, brought to you by
Air Uganda.
We rely on border borders to zip us quickly to our destination. Did you know that they started in the 1960s? They were used to transport people between the Kenya and Uganda border to avoid paperwork. Hence the term border border, the reason I love Uganda. One reason to love Uganda, brought to you by
Air Uganda.
The wings of East Africa.
Welcome back to On The Spot. My name is Ben Mwine. On The Spot tonight, Moses Bekabye, Interim CEO at the Uganda Retirement Benefits Regulatory Authority. And we're talking about what's going to happen to your money when you retire, how you're going to get it, and how it's going to be managed, of course, something that you want to pay a lot of attention to. Just before we into the break, we're talking about what's happening in terms of the system, the way it is, what seems to be wrong with it, what we can do to fix it. I wanted to find out, do we have a number in terms of a target that you want to hit regarding the percentage of people that are contributing? Right now we're at 7%, so a very small number considering most of the other countries you mentioned before we went into the break about the US, Europe, most of them are above 80-90%, which is where you want to be as a country, really. Do we have a number in mind in terms of where we want to be? When do we hope to get there?
Yes, when you look at what we have today, And if we include or we remove the threshold of 5 and above who are contributing to the NSSF, you can actually increase the number of those in the formal sector significantly. And you can increase that ratio of 7 to actually about 21% immediately. And then over time, as we build trust and confidence, when people start appreciating the need for saving for their retirement, then that can start going up to probably in the medium term about 40%. And then over the longer term, you're looking at 60 to 70%. And in some countries, it's about 80%.
Yeah. Now, there are two words that you keep on mentioning. I think you probably mentioned them about 6 or 7 times since you started the show. Trust and confidence. Some of the things that are very strong pillars that you must have for an efficient pension sector. What are the big things that must be benchmarked on for us to have an efficient system? Trust, of course, you mentioned is very important. People being able to trust you with their money.
Yes.
What are the pillars that you're banking all these reforms on?
Okay. In terms of trust, one of the biggest issues in terms of building trust is having a strong regulation. To making sure that the funds which are saved and invested are actually protected, and that the people who are saving actually get their benefits, they get their monies back, plus interest on this money or a return on this money, and to stop the leakages in the system. Okay, so that's part of the trust thing. But secondly, the way these funds are going to be, the way the schemes are going to be managed, they put the savers in the hands of their savings by creating irrevocable trusts. Some of the schemes, especially the voluntary schemes, they already have trusts where they have a board of trustees, where they have board of trustees who are elected by the members of the schemes. The people they do trust. And these people make all the decisions in terms of fund management, in terms of who they should be a custodian, in terms of who should be an administrator, in terms of who should be providing all these services. So one of the other elements is really this irrevocable trust that we are talking about. The other element of trust is transparency. Building transparency and ensuring that savers actually know where their savings are at any one particular time. So the reporting, the information flow to the savers, that's going to be very critical. But most importantly is also the way the funds themselves are going to be governed between the boards of trustees, the fund managers, the custodians, the administrators. So when you look at the governance structure that is in place, like, some people have been saying fund managers, are going to run away with monies and so on. First of all, the UBRA Act, the act which is in place right now, has restrictions, on the areas where funds can be invested or where areas where they cannot invest these monies. The law prohibits investment in speculative areas like gambling and so on. But also restricts beyond East Africa for now. Although there is
the money has to be invested within the East African region.
The East African. Although there is a small debate on some of the investment vehicles which are not yet available.
Moses, do we actually have the capacity to be able to enforce this regulation? One of the biggest challenges we have in this country in particular is the fact that we have a lot of very good laws in place, but enforcement of those laws has proven to be a big challenge for the last very many decades. How do we know that we'll be able to enforce these regulations?
Yes, I think the way the financial sector, because the area we are dealing with is part of the non-bank financial sector, the way the financial sector is regulated worldwide, it has to be an independent regulatory framework. Like you see the Bank of Uganda regulating the banking system. So the most important thing is really to ensure that there is a strong regulation, that the law is actually implemented, the regulations made under the law are implemented, and there is transparency and accountability. Accountability not only for the UBRA staff to the stakeholders, but accountability in the whole system, fund managers, all service providers, custodians, administrators, trustees, and so on, being accountable to the people who are actually owning these funds, and these are the savers. Which
brings us to the next big question then. Privatization, liberalization. Which one is it going to be? Because from what I'm hearing you saying, if we are going private in any way and bringing in private fund managers, let's just put it this way, Moses. The world over, people have proven that they know how to be able to beat these systems. And they can do a very good job beating whatever regulations you put in place. Now, when you privatize a sector like this in any way, or liberalize it for that matter, it comes with its own dangers, doesn't it?
Okay, let me address two issues. One is the difference between... let me get some water. Thank you. Let me address these two issues. One is private. You've used both words almost interchangeably.
Yeah, because
there's
a bit of...
they don't mean the same thing.
Exactly.
Privatization, as I mentioned before, and I've been explaining this concept, privatization means a shift in ownership of assets, or either by selling them or by donating them from government, shift from government to a private sector, a private person, a private firm, assets, ownership of these assets or services, provision of services, being transferred from government to a private sector, okay, or a private person. And that's what they call privatization, or selling them to the private people. What we are doing is actually not privatization. What we are doing is liberalization. Liberalization means you leave people with their structures, how they want to run their business, and then allow more people to come in. In the case of the pension sector, what we are doing in terms of the private sector and also the others is to create more NSSFs. But the ownership of the assets within the NSSF is not going to change. You're going to still have the employees who are contributing, the owners of these funds. And then you have the sponsors, the companies and so on, or prestators who are actually contributing towards savings of their employees. And then you have the government, because this is a forced saving. You have a government backing up this, but invisibly.
The government becomes a guarantor.
A guarantor of these schemes, but invisibly, just like the NSSF. And once we create like other NSSF, the equivalent of other NSSF, this is going to be the ownership structure of these schemes. In other words, government will be an invisible guarantor of the current NSSF and also those other schemes which will be licensed by the regulator to receive mandatory contributions. All those will have the similar governance and ownership structure.
Which brings me to the next question then.
By doing that, you bring in competition. Competition brings in innovation. Innovation in terms of collection, in terms of benefits, the savers, and also really the savers getting the best services.
That's what I was going to ask about. NSSF has been the biggest player right now. Where does this leave NSSF? Does it get disbanded? Do they hand over the money they have to the government, that then goes to other people? Where does NSSF fit into the whole big picture here?
Yes, as I mentioned, the governance, the ownership structure of the NSSF, or the governance structure of the NSSF, will remain as is, okay? Except that they'll have to have boards of trustees. In fact, the current board members have been licensed to be the first board of trustees for the NSSF, because the NSSF has already been licensed. But NSSF will be playing by the same rules. But given that the NSSF has been around for a long time,
they've had a very long head start.
It is well established.
1980.
It has the experience.
84.
And it's it is represented almost in the whole country, and it has investments. All the investments are going to be going to be guaranteed. They're going to be protected. All the funds within the NSSF, by the time the liberalization bill becomes law, are going to be preserved in the NSSF. And we are proposing that a third of the 15% will continue going to the NSSF for for the next 5 years. Also, the other funds are
a third of the 15% that is contributed by both the employer and the employee towards the pension.
Yes, and also I talked about funds being preserved also for the next 5 years. Okay, so that is, that doesn't sound like we are disbanding the NSSF. In fact, as of now, we've already licensed it, and it's advertising. It had its first annual meeting. It's giving out bank accounts. It's undertaking internal reforms in order to be competitive, because they know what's coming. They were part of our task force and have been part of the reform process, so they know what's coming, and they're working ahead of time in order to be competitive ahead of everyone.
You talked about things that you're proposing. I think it's very important for us to note at this point that this is a bill that is still before Parliament. It hasn't been passed into law yet. You might want to take some time right now and shed some more light on what is contained in this bill. What are some of the components, the main components of the bill that need to be taken note of by the people that are watching tonight?
Yeah, I think one of the biggest components of the bills is to allow for expansion of the pension of the social protection to the informal sector, increasing coverage. The other one is providing a policy and legal framework for the management and investment of voluntary funds. The UBRA Act provided the regulatory framework. Before, there was no regulation. Everyone came in, and that's why you had all these problems, not only in the NSSF, but also Public Service Pension Scheme, but also those schemes which receive voluntary contributions. They all have governance issues, and that was mainly because there was no regulation, and that is in place now and is being strengthened. The bill also provides for portability within the country between schemes, but also within the East African region. But also provides for investment classes in order to promote diversification. The bill is very, very protective of the NSSF. It also makes a differentiation between schemes receiving mandatory contributions versus those receiving voluntary contributions, in terms of the way they are going to be regulated, the way the funds are going to be handled, and the governance structure. There's some bit of differentiation, and this differentiation is mainly to preserve the voluntary nature of those voluntary schemes, but also to reduce cost on those voluntary schemes, and also the small schemes.
You said mentioned something about mandatory and voluntary schemes, in terms of you've got people who have no choice but
voluntary or non-voluntary,
and we'll get to that because it's a big component in a bit. But before we go into a break, I wanted to ask something else in regards to NSSF. You just said that we have licensed NSSF. They've already gotten their license.
Yeah, the authority licensed them.
Do we know how many other players have applied so far right now? Do we have any figures in terms of how many people have been given licenses, for example?
Yes.
Where are we in regards to the numbers of the players that we expect to have in the market when this finally comes into play?
Okay. We have more than 200 applicants in all categories of the sector. That means retirement benefit schemes, trustees, fund managers, custodians, and administrators.
Do you want to quickly shed some light on the definitions of each of those, because it seems like a lot of people and what they do? I think that might be important for the lay person who is watching the show and doesn't understand that.
Yes. The trustees who actually from whom the trustees who form the governance structure of these schemes have the fiduciary responsibility. They are responsible for the protection and for the investment and whatever happens to these schemes, to the funds under these schemes. And those are the trustees. I think for mandatory schemes, we are saying at least 3. But for those schemes receiving mandatory contributions, we are talking about at least 5 of them. And then you have the fund managers. The fund managers are the ones who will be specialized. Fund management is a very specialized business. Although some people think they can do fund management. But fund management is very, very specialized. And these are mainly private people, private companies. But they are not the ones who are going to be making a decision for investment. And they are not going to be holding any cash in terms of doing their business. Because the cash or the assets for the schemes are going to be kept by the custodian. The custodian, right now we have 4 custodial banks, or 4 banks undertaking custodial services. And this is the Housing Finance Bank, we have Stanbic Bank, you have Kenya KCB, Kenya Commercial Bank, and then we have Standard Chartered Bank. Standard Chartered Bank. So we have 4 banks.
So that's the custodians.
Those are the ones who are going to provide for now, which have been licensed to receive to offer custodial services. And these ones have also been actually okayed or given an
have their licenses as well
by the Bank of Uganda to do these kind of things. So what will happen is that when you make a contribution, for instance, or your company that is employing you, let's say NTV here, you know, they'll make the NTV will make a contribution, you know, on your behalf, and that will go directly into the custodial banks, and these 4 banks. And then the administrator, the one I'm talking about, will do the reconciliation. Will know, okay, NTV, for instance, transferred 100 million. Who are the owners of these funds? And that's the work of the administrator. I
wouldn't mind 100 million being contributed for me. That would be nice.
Yes, yeah, to keep records, to reconcile, to make statements and issue these statements and so forth. When it comes to fund management, what will happen is that the decision to make investment or to invest these funds is going to be made by the boards of trustees, and then the boards of trustees will give instruction through will get kind of like advisory services, or they'll get proposals from the fund managers they will have employed to say, well, I think it is better to employ these funds as follows, to invest here and there. The risks are as follows, the benefits are the following. And once the decision is made by the boards of trustees, then instructions are given by the boards of trustees to the custodian to actually transfer the funds into that investment. And when an investment is made, the assets, let's say land titles or certificate of deposit or any other investment certificate will be kept by the custodian, not by the fund manager. Okay? So the fund manager will not actually hold any cash. So if the fund manager is to run away, he runs away with nothing, not with savers' money. And that's how it's going to happen.
Okay.
And the administrator will do the recording, the reconstruction, they will give you the information, the bank statements, and so on.
We're going to take a very short break. When we come back, Mr. Moses Bekabi answers some of your questions. Of course, we'll give you a chance to get involved. You can join us on social media at NTVUganda is our Twitter handle, and NTVUganda on Facebook as well. Phone line will be on your screen, so you can call us if you have any questions for him as well, as he talks to you a little bit more about investment. We'll talk about risks involved, how you'll be able to get your money when this pension reform bill becomes a law, and of course, the issue of voluntary saving versus mandatory saving. What are the benefits of each, and how will that work? That and much more when we put Moses Bekabi back on the spot in just a minute.
MTN, everywhere you go.
On the spot tonight, Moses Bekabye, interim CEO at the Uganda Retirement Benefits Regulatory Authority, and is answering your questions regarding the ongoing pension reforms in Uganda right now. Of course, something that in a very big way affects you. Our phone lines will be open. You can call us on the numbers on your screen and be a part of the discussion as you ask him any questions that you might have regarding, well, your money. Speaking of our money, Moses, mandatory savings versus voluntary savings.
Yes.
What's the difference? How will the schemes work when this comes into play? Will everyone be forced to put money? The people, especially in the informal sector, who are coming and haven't been a part of the systems that we have at the moment. How is that going to work?
Yeah, let me start with the mandatory. Right now, you have people who are you have systems. Let's say talk about the public service pension scheme. Most of the or all the people who are employed in the civil service, after working for some time, they qualify to get pension, their pension, or they start saving, or their pension start accruing.
From the moment?
Yeah, from the moment they start employing.
Yeah.
Of course, there is a vesting period. Maybe can be 5 years or whatever, below which you may not get anything. But once you cross that, then you get something. In the case of the private sector, those contributing to the NSSF, as you know, is companies employing 5 and above who contribute to the NSSF. And then
and that's mandatory.
And that's for the mandatory contributions. Okay? And then you have those companies employing 4 and below, really not contributing anything towards the employees, and also the employees not making any savings towards their retirement. Okay? So what we are trying to do in the case of mandatory contribution, in terms of those people who are in the formal sector, all those people in the formal sector are going to be making mandatory contributions. And that's going to be by act of parliament.
That's regardless of how many employees you have?
Yeah, regardless of how many employees. Even if a company is employing 1 person, the employee will have to make a deduction towards mandatory contribution, and also the employer will make a contribution, about 10% of the salary of the employee. So that is going to be the case. So it's going to expand it to that. When it comes to voluntary, you're looking at those people who may not have an income, or who may not be employed by anyone, who are self-employed.
Which is the bulk of the people.
Who are the bulk of the people. They may be in the informal sector.
Agriculture is the biggest employer in many ways in terms of the informal sector.
Yes.
So.
In terms of the bill that is in Parliament, those people, the proposal is that they make voluntary contributions. Of course, there has been a discussion on whether this should not be making mandatory contributions.
I was going to ask that, isn't it for their own good for it to be mandatory for them to make contributions as well? I mean, for their own benefit?
I think as people appreciate the need to save for the retirement, for the time when they're not able to work, for the time when they will not have enough energy to be employed, or for the time when they lose employment, because you can be in employment, you can be out of employment, and you can get back into employment, like that. But during that time when you're out, you need to have a social protection, a social safety net, at least a minimum social safety net, so that you don't, within that period, be faced with, conditions, living in conditions which are not favorable. So what we are trying to do, probably over the longer term, once people start appreciating the need to save, this is something that we may start discussing, so that people who are also not really receiving any an income or not employed, trying to make money. But that's not the proposal right now.
I have a question about that. Before we do that, we'll just go over to our phone lines and take a couple of phone calls. Thanks a lot for calling us. Please give us your name when you do call us. Tell us where you're calling from, and keep your comment or question to under 30 seconds so we can take as many calls as we can. Hello, thank you for watching On The Spot. Welcome to NTV. I think we lost that caller. We'll go on to our other line. Thank you for calling NTV. Welcome to On The Spot. Please tell us your name and where you're calling from. I think we lost that. We'll get back to our phone lines in just a little bit. Okay. You were talking about the savings not being mandatory. Let's face it, Moses, Ugandans have a very bad culture of saving.
That's true.
We're really horrible at saving.
That's correct.
Aren't you doing us a disservice by leaving it up to us, saying you can do, take your time? Shouldn't we be forcing people to do this now instead of waiting for later? Before you start, I think our phone lines have been fixed now. Let's go back to our phone lines. Hello, welcome to On The Spot. Thank you for watching NTV. Hello, can you hear us?
Yes, hello.
Yes, please tell us your name and where you're calling from.
Hello, this is Joseph. I'm calling from Tororo.
Yes, Joseph.
Now, my question is also the people under government going to be monitored by UBRA?
Okay, I think we lost Joseph. If I'm not mistaken, he was asking about people who are public servants being monitored by UBRA. We'll take another phone call. Thank you for watching NTV. Welcome to On The Spot. Hello, good evening.
Good evening, sir.
Thank you for watching NTV. Please tell us your name and where you're calling from.
This is Namoyo in Soroti.
How is Soroti this evening?
Soroti is fine.
It's good to hear from you. What's your question?
I wanted to know whether the civil servants in the public service will also join the scheme, and also if it will be compulsory for them to contribute to the scheme. And if that is so, will we be retired first and then people recruited on contract terms so that they can be part of the scheme?
Okay, thank you very much. We'll take another 2 phone calls before we hand the questions back to Moses here. Hello, welcome to On The Spot. Thank you for watching NTV.
Hello.
Good evening.
My name is Patrick.
Yes, Patrick.
I'm calling from Mbale.
How is Mbale?
It's okay. I'm trying to get to the On The Spot.
Yes, you are on the spot, Patrick.
Yes, I wanted to find out. I've not there. I've not looked through all the reforms which are coming up. But I wish to know how the reforms will help people that are savers. That sometimes you lose a job for 4 years, you don't have anything you're doing, and yet you have a lot of money in saved and you can't access it. I don't know how the reforms are going to help people in that kind of situation who have a lot of money, and because one of these reasons they're not able to pay for their children, school fees, and then there's money kept somewhere. I wish to know if you take care of such situations.
Okay, thank you very much, Patrick. We'll take one more before we go back to Moses. Some very interesting questions you're asking. Hello, thank you for joining us on the spot. Tell us your name and where you're calling from. Dennis, good evening and welcome to On The Spot.
Yes, please, I'm inquiring about the NSSF contributions. How does one begin processing that fund? And I was requesting, can the NSSF institute a system where somebody can access that fund, say for instance via ATM, and such that say or after one has retired from his active service?
Okay, thank you very much, Dennis. We'll hand these questions back to Moses and then maybe get back to the phone lines a little bit. Dennis is asking about NSSF and how it fits in. As you can imagine, of course, a lot of the questions having a lot to do with people, well, wanting their money. But I'll start with Patrick's question because I think that's a very interesting one. And Patrick was asking, I've been employed for quite a while. I have accumulated maybe about 60 million shillings in my NSSF account. It's lying there. Due to circumstances, I'm not been employed for the last 3 years. I've got a bank loan. I've got kids to take to school. I haven't reached the retirement age yet, so I can't be able to access my money through NSSF. What do I do? There's got to be something that can help Patrick. What does someone do in that sort of scenario? Does the reform and the bill cater for people that are in that category?
Thank you very much. First of all, right now, what you have, people accessing their benefits, particularly those contributing to the NSSF, they have to reach the age of 55 to be eligible for their full provident fund, because it's not a pension. In other words, it doesn't guarantee a social protection over longer term when you've retired or when you have problems. It's something that is paid once, and if you blow it up, then you're in trouble the next day. So it's not a pension. It doesn't provide you, it doesn't give you that guarantee of a standard of living that you would want to see when you retire after you've been contributing. So, so what I wanted to say is that, but also there is, if you lose, for instance, your job currently, and you are 50 years old, you actually get early access. But in terms of the reform, we have early access if you've been contributing for 10 years. And you want to you want to access your savings. You have enough savings, like he says, 60 million. Probably you want to access part of that in order to acquire a residential house. So the law allows midterm access for the purpose of acquiring a residential house. And the reason why it's a residential house is because a house, a shelter, is a key element of social protection. And I explained this last time. But they also, the law is going to be allowing other options, you know, like for education, maternity, and so on. Those are going to be some of the options the saver can actually benefit. And those arrangements are going to be worked out by individual schemes, because they are going to be optional saving arrangements under these schemes. And therefore they can be able, if they have problems, for instance, health, you know, and you want some money, and you've been contributing towards this option, you'll be able to get those help using those avenues. So the schemes are going to, the reform is going to bring about quite a number of products which the schemes can tailor to the needs of the people.
Then the last question, of course, was about for the civil servants, if this is going to be compulsory for them as well. And I think there was a question vested in there about them being able to access their pension as well. Of course, right now we've been having a major problem with our pension service, especially for the public service, because it's in arrears virtually all the time. Yeah,
the public service is going to undergo quite significant changes. One is to improve governance, to make sure that people who are not currently getting their pensions, or those who are about to retire, get their pensions as they are due. And the way we are going to do this is to ensure that the authority has all the information on arrears and also on the current savers, so that when they save, for those who are in arrears, to make sure that those obligations are actually settled and they are paid. For those who are contributing, to make sure that as soon as they are eligible, they access their funds. What we are also going to try and do is to create a public service pension fund. In other words, to separate the current system now combines the Ministry of Public Service with the pension scheme. It's combined. And the governance there is very, very difficult. And there are a lot of issues which the reform is going to be addressing, to make sure that when the new system is in place, when people contribute to these schemes, like the NSSF, they know where their funds are invested, they know the return on this money, and then they can be able to actually access their savings, plus the interest, as I said, or return on investment, or through, say, pension or monthly payment, or other forms that the authority will authorize to be able to meet their retirement age needs. So it's going to be compulsory for the public servants to actually contribute to this fund. But they will also be given choice. If they think that this fund is not being managed properly, they'll have choice to actually save in other schemes. Because as I mentioned the choice, which is so important for building trust and confidence. You don't want to force people to save their money in a system they don't trust, or a scheme they don't trust. So we are providing choice, portability issues as well, in order to allow this to happen.
Well, unfortunately, we are out of time. I'm sure this is not the last time that we are seeing you, because there's still so many questions that are unanswered. We'll be looking forward to you coming back and putting some of those to bed in the near future. Moses Bekabie, thank you so much for being with us on The Sport tonight.
Okay, thank you so much.
And on behalf of the entire crew here at NTV, thank you for joining us. My name is Ben Mwine. Have a good night.
Thank you so much.